These are the 4 losses I avoided today. And this is exactly how I avoided these unnecessary losses. Coming into the day with the buys, you can see that we are obviously very bullish because we just swept this low inside of fair value gap and distributed it with the war news. We can see we sprang about 1,000 points and we hit this buy side liquidity above here, and we still have low resistance draws above here and previous week high. Coming into the day, I was not looking for a trade because these are low probability conditions. Because first, Asia expanded 1,000 plus points. We had this whole week of war news and more war news during this day. And this was also pre-FOMC. These are types of conditions that you don't want to be trading in. The reason these are low probability conditions is because New York tends to accumulate after Asia session has a big expansion. Because you can see here, we have this big expansion taking this buy side liquidity where there are no more clear objectives and there are a lack of targets. So New York AM has to generate liquidity so then we can manipulate lower another day and target these highs here. War news tends to be very volatile, which causes big moves up and down, which makes price often unpredictable. You can see here in Asia session we printed 1,000 points because of the war news, which shows that New York session could be unpredictable, choppy, and just accumulation. Another day you should not be trading before is pre-FOMC / Powell and war news, because we often accumulate that day until the news comes out and then we start the real move. Coming into the day with an already low probability day, you want to make sure you're taking the right setups. So I'm going to tell you exactly why I faded this setup. This idea is off a 4-hour fair value gap with a 5-minute inversion to the upside. The reason that this trade is good is because we had a good closure and we had our 930 open low and add to this buy side liquidity. We didn't sweep it, but instead we added to it. So for further targets, we can target both of them. What's bad about this trade is longing at the top after we just pushed 1,000 points. So we're extremely premium. So you can see that during Asia session, we pushed up 1,000 points and you're just taking the first long opportunity that's there, especially up 1,000 or 6% on the NASDAQ. So it's just not the ideal type of trade you want to take, and you would want to be more discount to take along. This trade is also not technically valid because it's not the highest time frame fair value gap of the leg, because we can see we have this 5-minute right here, but we also have this 5-minute here and this 5-minute here. And for us to fully validate this IFVG, we have to inverse all the gaps in the leg, which just messes up the RR and wouldn't even be a good trade. So by just taking this one and going break even this one is not valid, and you will lose a lot of the time. The third thing is we also have bare minimum targets. You can see if we're targeting this 5-minute gap or going break even at this 5-minute gap, then there's no reason that we should go to this 5-minute gap. You can see here what you want to have in all of your mech model setups is lower resistance liquidity leading up to this 5-minute gap. And you can see in this trade, we don't have even a swing, we just have a 5-minute gap. So there's no really reason for us to go to this 5-minute gap unless we have low resistance liquidity. And the fourth thing is we have no stop hunt. This is taking the first inversion setup. We just tap into this 4-hour in the first inversion. We need to get better structure, and we also need to create low resistance liquidity for a better win rate and a higher reason to hit our targets. This is the second setup that people got trapped on, which I also faded. This is the 30-second long after we tap the 4-hour gap, targeting low resistance liquidity and a 5-minute gap. What's good about this is that it's not bare minimum anymore. We do have these low resistance draws leading up to this 5-minute gap, so there is reason to go to our target. But what's bad about it is that we're still longing after we just pushed 1,000 points up. You'd want to see a deeper retracement, and as well as ES is not in a spot to distribute, so ES hasn't even hit the 4-hour gap. So in cases where we're super overextended like this, you want both them to hit the 4-hour gap and have true manipulation, but in this trade we did not have anything, so ES is just randomly going to distribute off of this. The third thing that's bad about this is that this is a 30-second inversion, and you only want to be taking 30-second inversions and A+ setups. Price action look like A+ to you. You don't want to be taking 30-second IFVGs and choppy price action like this. This is also a fake accumulation manipulation distribution model. In this trade you are actually the accumulation. You can see in here we have the accumulation, and it seems as if we manipulate lower and then we should have our distribution, but this whole thing is the accumulation. You need to have your accumulation be very, very obvious and have your manipulation even more obvious. You can see this is how you should be structured. Have the accumulation here. It should be obvious that it's manipulation. Does this look obvious that it is? It doesn't. It's still in this range. We don't even get a body closure above or below to confirm that we are manipulating somewhere. We just keep printing wicks, and this whole thing is the accumulation. You don't want to be taking trades. It should be a very obvious low and high close. This is the third setup that people got caught on that I also faded, which was a loss. And what's good about this trade is that we've been generating liquidity for about 45 minutes, and we also have a gap, a 15-minute gap up here that we're targeting. What's bad about this is that we're still longing while we're up 1,000 points in Asia session, and ES still hasn't hit a 4-hour gap or a spot to distribute. So you're just betting again that we're going to distribute off of nothing, and this trade isn't that much better than the other trade, and you can see that we're still extremely choppy. So just for the chop, you shouldn't even be taking this, especially that's not super clear and obvious. You can see that this is just bad structure. You can see we have a little bit more clear manipulation lower. We don't have that confirmation of the distribution. You can see we do get the IFG, but you have to use this with context. You should get a strong close in the range, at least around here, or you sometimes, when it's not obvious, you can wait for a CSD to very much confirm that this is the obvious manipulation. Just looking by the structure, this looks like that we're just generating liquidity and you are still in the accumulation. The manipulation should be very obvious, and you don't want to be taking it along in this type of falling knife structure. So you can see this AMD is perfect. We accumulate and we clearly manipulate, and we have a strong close in this accumulation range. And we have accumulation range here, but we don't even get a closure. So you want your closure to be at least above here, and for extra confirmation, wait for a CISD above here. This is the fourth step that we got today, and it's off a 4-hour gap with true manipulation. So ES and NQ both hit the gap, so we're both ready to distribute. Then we have a 2-minute IFG, and we're targeting this low resistance draws and this 1-hour gap. So this is good because it's not bare minimum. We have lots of low resistance targets, and we've been accumulating the whole 10 o'clock, and when 11 o'clock hits, then we're going to run through all of this liquidity. And we also have a very high time frame gap above here with true manipulation. We also get a super strong closure above. We have this first IFG here, but still not valid because we have another one above here, which we get a pretty strong closure above, showing that these candles want to go up. We also have a very clear manipulation here. You can see that we accumulate here, and then we have a straight candle down, showing that we're reacting off this 4-hour and ES hitting the 4-hour, and then very strong body closures above, confirming the distribution. Now this could have been a loss depending on where you put your stop loss, but it also could have been a break even or a win. What's bad about this is that it's end of session. You can see this is 11 o'clock. The session has completely ended, and you can see that the price action has already been horrible for this whole time. So you can't always expect 11 a.m. to be perfectly good. Another thing that's bad about this is you're entering at the 11 o'clock candle, so the 11 o'clock candle can always manipulate. Obviously, with high conviction, you can still target this. I recommend, and for me, I don't take entries at hourly candles because I often get manipulated out, and then it goes to my take profits. That is recapping all the price action of today, and for me, the main lesson of today was when Asia expands 300 points plus like it did today, then price action will likely be bad and will be generating liquidity instead of distributing towards liquidity. You should come into the day being very careful and only taking a very A/A plus setup. Another lesson is on days like today where you know price action is going to be bad, you want to make sure that you're not forcing anything and ask yourself, will I be mad if I lose today? That's exactly the reason why I was just looking at the charts, but I locked myself out, because if I lost today, I would be really mad, because I know that's obvious that in New York session, we're going to be generating liquidity because of the massive push that we had in Asia session. A very obvious sign of bad price action is when there's no high time frame gaps being created above 5 minutes. You can see today that there was absolutely, after 9:45, there was not a single 5-minute gap created, and then only after 11 o'clock we started creating gaps and distributing. Thank you for watching this explanation of how I avoided all these losses, and like and subscribe for more videos like this.